The S&P last week came down 3% from Wednesday through Friday, 3 consecutive fairly harsh down days, in line with the forecast that we made in the middle of the last gold video, where we're still expecting a decline until late in the month, based upon the 49-week cycle, which has been extremely reliable over the last 3 occurrences. Today is July 21st, and we're talking about what is likely the next month or so in the S&P. This is more for the swing trader level. The 49-week cycle has a very strong consistency in terms of the way it repeats, and the last 3 occurrences, all 3 of them agree the market should fall down somewhere between the 29th and the 31st based on that one cycle. It's slightly different than the low on the 26th, which was anticipated by the 13 and 26-year cycles. But because the short-term cycle is so reliable, we're going to go with it. So we're looking for some kind of continued decline into the end of the month. It turns out that's the date of the Fed decision. And the expected result after that is another sharp rally. The rally should go from roughly the 30th or 31st until August 9 through 13 as a high point. Now, some of the cycles we're looking at say that's an all-time high. Some of them say it's a retest of the high that we just made on July 17th. But they all agree on one thing, that there's a fairly meaningful decline starting the middle of August until the middle of September. We don't know exactly how big, but we expect it probably is going to be around 10% if those patterns repeat. After that, the market resumes some level of strength. Now, after the September low, the market is likely to rally into the late part of December and have one more rather dramatic rally up after this decline. So it's not like the world is coming to an end here. In the year 2000, the high came in late August, and that was the high, but we don't anticipate that to repeat. We expect that after this decline, the market will resume until year end, and potentially even longer into May of 2025 as the final high of any kind of bullish tendencies. However, this next decline is probably very likely, and it has probably either started, where we're going to get a retest early to mid-August, or a slight new high in early to mid-August, followed by a nice break in September. Also, there's a very good chance we're going to be having our next Trade Forecast Mastery Masterclass starting in the early part of August, possibly as late as the middle of August. And we'll have sign up for that anytime. If you're interested, please let us know, and there's a way to register. Now remember, these videos are general information points relevant to get on the right side of the market. They're not expected to be trading signals. They may be off by a day or two or even longer. And if so, it does not mean that we don't want people taking these signals and using them and just buying and selling off those dates. We have many other tools that we provide, including some specific exacting mechanical trading systems that we teach as one of the products that we offer to our students. And in this next course, we're expecting to add another one. We call it the 6-point system. And the students that we've been working with already have been finding it very exciting. And that'll be a third mechanical system that we're bringing in along with the forecasting. So the forecasting is there to give you a general, sometimes exacting, but oftentimes general idea about the ups and downs of the markets. And that's very, very important because that's not easy to do. And these trading machines are there for the purpose, these algorithms are there for the purpose of giving students who are not that familiar with their own trading systems methodologies that they can buy and sell, get in and out of the market successfully.